What is the basis on which we form our opinions and how that is related to the psychology of investing. Industry expert Amrita is with us today to explain this with interesting examples.
Let me ask you a question. Which amongst this, accidents, terror attacks, brain strokes, is most fatal? Fatal means it can take life threatening. So which amongst this causes maximum number of deaths? Is it accidents? Is it terror attacks? Is it brain stroke? The most fatal is not accidents, it's not terror attacks, it's brain strokes. But a terror attack and an accident, the visual images are quite scary. It's quite nerve-wrenching. And that's why we feel that these are far more fatal than brain stroke. Brain stroke is a silent killer. Strokes cause almost twice as many deaths, and this has been taken courtesy the book Thinking Fast and Slow by Daniel Kahneman. Strokes cause almost twice as many deaths as accidents combined. Diabetes causes 4 times more fatality than accidents. With the exception, few horrible like 9/11, etc. The deaths due to terror attacks is relatively small compared to other deaths. In fact, if you look at the pecking order, it is strokes followed by accidents followed by terror attacks. But when we see such images, that Nifty tumbles, Sensex tumbles, Nifty goes below 19,300. We see all these visuals that the war has entered 21 days and all of that. This is affecting our psyche. When danger gets splashed everywhere and it is linked to inflation, it is linked to our asset classes, I'm not saying that don't be concerned. Definitely be concerned. Review your portfolio, but don't panically sell or neither panically buy. So when danger gets splashed everywhere, be it financial websites, media shows, social media, it catches our attention. It grabs our mind. Yeah, and that leads to availability bias. So availability bias is when we see a big stock market crash, like in COVID, between February and March, markets corrected by almost 40%. Now that's a big correction. And then equity inflows stop. One, there is virus in the air. Second is that it is highly contagious. Third is that a lot of people lost their jobs. Fourth is that markets have also corrected. We are all panically redeeming. And that panic redemption is also not just loss aversion, it's also because of availability bias. Many times we buy products that are heavily advertised. We are into Instagram, Facebook, and we see a lot of advertisement because they use algorithms to understand which all pages we have visited, and they give advertisements of that. And when we see those heavy advertisements across social media, across different other channels and mediums, we invest into such products or we buy into such products. That is also called availability bias. Definitely stems from your system one thinking, because anything that is eye-catching catches your attention. Again, the primal brain is at work, and that is why it emanates from availability bias, comes from system one thinking. These two are very important, familiar and narrow range experience. Now, not only confirmation bias, many a times we will buy, like I have worked with Franklin earlier, Franklin Templeton, and invariably a lot of my investments were in Franklin Templeton because, we feel it's a frog in the well attitude. And we only buy, invest into financial securities that belong to the sector we work in or that belong to the company we work in. And that is not just confirmation bias, that is availability bias also. So availability bias is widely publicized, advertised information, some recent dramatic images and events. They all impact our psyche, impact our memory, and basis that when we decide on something, act on something, it is because it is easily available in our memory. That is why it's called availability bias. So how can one reduce availability bias? Carefully research investment decisions, or is it through focus on long-term results while resisting chasing trends? Invest only in India-centric investment products, not to mentally emphasize recent newsworthy events. So how can we reduce availability bias? By the time you know that researching investment is so important, please enhance your knowledge. While you can entrust your money to a capable financial advisor and to a asset manager of credibility, but finance is not meant for professionals. It is meant for everyone. And always research, enhance your knowledge. Always ask yourself, am I investing into a particular fund because I saw that company's advertisement in Economic Times, or I saw that that fund being featured in some business journals? Is it that I saw big hoardings about that particular company? Is it that is driving my investment decisions? So if that is that, please don't mentally and overtly overemphasize on recent newsworthy, eye-catching events. Always look at the big picture rather than chasing short-term trends. Because Sensex fell by 900 points. That was a big fall 3-4 days back. But the very day, points of 600 plus points. So ups and downs, volatility is part of equity, but it is like a wave. And that wave is actually going up and up. We have to give time to it. And we are not like a country like Japan. It's quite a young country with good demographic dividend. The more poverty level comes down, the more middle class expands, consumption will rise. Our country is consumption centric. There might be problems, but we have still stood tall for 76 years. And if the country stands tall, obviously its capital markets will do well. So while it is good to have optimism, like I'm giving you an optimistic story, you can have a little bit of pessimism also, but focus on the long-term results, focus on the big picture, resist chasing trends as well. So I agree, it is 1, 2, and 4. Very important. Don't overemphasize recent newsworthy events.
Thanks for your detailed explanation. Are you in search of a personal guide who can remove the stress of handling your finances? Then please feel free to avail our expert consultation. And also you can attend our webinars to gain investment related insights. Both the consultation and webinar are absolutely free, and you can find the link in the below description. Please like and share, and do subscribe to Holistic Investment.